Vipul Sanghvi of Systematix is joining us to talk more about markets. So Vipul, afternoon, thanks for your time. At Systematix, what kind of discussions are you having with your institutional clients? Is there worry and nervousness, or is there buoyancy and they're looking for ideas? Give us some feedback.
Yeah, sure. Thank you. So as you rightly said, markets are kind of fairly resilient amidst a very challenging macro. And at the same time, on the flip side, we have a very strong micro story, which is, running across Indian corporates. So obviously, clients, more so the domestic guys, are fairly, optimistic about the India micro story playing out nicely, while the macro continues to remain fairly challenging.
Right. So you expect this buoyancy to continue, because there's one part of the strategist community which say that this resilience is short-lived. We are on borrowed time, because there can't be much decoupling practically between Indian economy and the global economy. If global economy goes for a turmoil, we have to face some headwinds as well. But the stock market behavior is completely alienated from that. Where do you stand on that argument?
So I think there are two parts to this story. I completely agree to the fact that we can't remain decoupled for a fairly long time. And as global central banks continue to tighten and their currencies and also dollar is strengthening, the emerging markets, including INR, there will be pressure, and to ward off that pressure, RBI will also have to raise rates fairly, swiftly. So that backdrop continues to remain fairly, at the back. At the same time, we are, amidst a fairly strong micro story, which is Indian corporate balance sheets are fairly lean. Second, bank, liquidity and their capitalization levels are, fairly within control, and rather they are flush with liquidity and willing to lend. Third, you have a government which is going all out, to kickstart the capex cycle. Fourth, very important sector, real estate, has kind of turned the corner, and that, kind of seeds into demand for various sectors which are linked directly to real estate. So it be it building materials, be it consumers, be it cement. So everything kind of draws from strength in real estate. So having said that, we'll be very watchful as far as how this entire backdrop of global central banks tightening plays out, how the crude behaves. All these, as we approach winter, it will be a key monitorable from here on.
Right. Well, talk to us about the areas of the market which you are finding attractive right now on risk reward. Because right now, almost everything appears to be frothy in the stock price terms. But areas which have not done well, or even if they have, the underlying earnings potential is strong enough that their risk reward is very attractive.
I think one large sector here continues to be banks and the entire BFSI space. So as we talk, the balance sheets, the asset quality cycle, the worst of the asset quality cycle is behind. The credit growth is steadily picking up. The valuation are not outlandish, I would say, in large banks as yet. Similar is the story in some of the NBFCs and more so the asset-backed NBFCs, which are focused on say commercial vehicle financing or housing. So these are some spots within BFSI space where these are large liquid names. Valuation are I would say somewhere in the mid-cycle zone, and it remains one large area of for market outperformance from here on, in our view. Second, the entire industrials and cap goods basket, which is facing tailwind from China plus one, Europe plus one stories. At the same time, kickstarting of government as well as private capex cycle. Third, in my view, would be the entire building material space, which is drawing strength from revival in the real estate industry. And fourth would be pharma, which is not so, I would say, in vogue as far as the broader market is concerned. But what we feel is, again, here is a sector where uh, two out of the three components, when I say the three components, which is US market continues to remain challenging, the US generics, but here also the companies which are focused on complex generics will eventually do well. The two other components of the pharma market, which is India plus emerging markets, are kind of fairly doing well, and this sector remains, in our view, one of the dark horses. So these are some of the sectors which we feel going ahead from here over next 12 to 15 months will continue to deliver outperformance.
All right, Vipul, we'll let you go on that one. Thanks so much for joining us on the show with your thoughts.